The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. I was going to say we're back, but we're not back. And this is for some of you. It's fresh, but I just did Steve's show, so I am back. And this is the Tiger Technicians Hour. My pleasure to be here Monday through Friday. And, of course, I'm the author of the daily newsletter, The Opening Call, and the CD introducing the Chapwave methodology CD book. This is what it looks like. We were just talking a moment ago about the rogue wave analogy, and this is the front cover, and this is what that's it. So we're looking at the S&P E-minis at up $9, having made a leg C, but underneath the 2107 high that was made on the 23rd of March, and way under the 2107 was a 2109.75 high of the 25th of February. All right. Very good action so far today. I am looking at nominal new highs possible in some of the indices. The IWM has already done that. And there's still a chance that this rotational correction is ongoing and that we could continue correcting for a little while. If there is a pullback at any point in April, underneath Dow 17,600, 17,500, absolutely imperative key support, we will go down deeper. That's the way I'm looking at it. On the upside, I see a lot of resistance in the 18,300, 400 area. Oh, maybe there at some point there could be 18,500. But until we really build up the energy to power into the 19,000s, I think that we need more digesting going on. But it's rotational, and that's really important to make a note of. All right, enough with that. Let's go through the numbers now. You can see that the weekly chart in the E-minis is really close to getting that leg D. And that's what we're going to be watching. And you'll see in the 120-minute chart, there's a whole series of resistance levels that take you to, I just hit that by mistake, can take you to the 2107s, allowing for a test of the all-time high. Let's get rid of that. Now we're going to go to something else. Oh, you know, I wanted to talk about something yesterday. I'd written it down, and of course, I never got to it. It was right in front of me, and every break, after the break, I said, I've got to talk about this, and I never did because we had a lot of callers. I wanted to talk about Jordan Spieth, Jordan, the winner of the Masters the other day. I thought that was, I was doing a lot of work on my charts. So I was watching a lot of the Open for the weekend. And the thinking, what struck me most of all was the respect that I could see that all the players had for one another. How this kid, 21-year-old, was actually producing and pushing so that you got the very best out of all the players. I was fascinated by that. I thought there was a level of camaraderie, a level of respect that I haven't watched in great detail the Masters, but periodically when I watch it, I see what's going on. But this was different. This was as if it wasn't a competition to just catch the first player. It seemed to me that everyone, I mean, out of the blue, there's, what's his name, Justin Rose, I think it was, starts to produce some putts that looked impossible. First of all, Jordan had putts that were, I don't know how he got those. And I'm trying to think of what's his name. the older guy. He's not so old, but older. Why am I forgetting his name right now? Someone in the den is going to remind me. He was fabulous. I mean, he was chasing down shots. He showed what experience could do. Some very difficult shots, just handled them with ease. I'm forgetting his name. I don't know why I forgot it, but that's the way it goes. There it is, Phil Mickelson. I mean, it was just. I'm not a golfer. I've played maybe 3, 4. I got some funny stories to tell about the very few times I've ever played. Actually, I'll tell the one story. I have some neighbors. I had some. I guess one is still a neighbor, who a long time, I'm talking 20-something years ago, said, "Come on, we're always going to play golf. You're off to tennis, but how about joining us this Saturday morning? We'll go play golf." I said, "So how long is it going to take?" And they said, "Oh, we're playing golf. It could, take quite a few hours." Hours? I said, "Okay." So I said, "Fine." So I said, I've only played maybe 3 times. Once was when I nearly chopped off a part of a finger when I was in high school, and I took the rest of the day off, and my friend who lived next to a golf course said, "Why don't you go play golf?" So we did that. I just maybe very rarely. So what happened, says, "Come on, you come." So I went with them. And I'm standing there. I think I was number 2. So my friend, one of the friends, he tees off. Not bad, does okay. And I'm standing there ready to tee off. And I thought, you've watched Wild World of Sports for so many years. Just in your mind, just follow exactly what they do. Remember, you want to keep your head down. You want to, and I'm talking to myself, and I'm concentrating, and I swing, and I right through, but I missed the ball. So my friends made a couple of little comments and things like that, and I thought, "Oh, okay, it's not tennis. You've got to bend down a little more." And I did exactly the same thing, but I hit the ball, and it was a spectacular shot. It was really, you had no clue whether this is the first time anybody had hit it or it was their 1000th time. It was just perfect. "Oh, yeah. They all thought, 'Oh, you've been putting us on all this time. You're really a golfer.'" I said, "Yeah, no, don't get me wrong." Well, that was the shot. That was the only, that was the shot. I mean, after that, for about 1 second, I was the Gary player from South Africa. I did okay. I managed to keep up with them, but nothing even close. It was one shot. I have no idea. How does a ball go behind you when you're teeing off? Yeah, it was fantastic. It was quite an experience. So yeah, all right, so golf. Enough with that, let's get to the stocks. So the Dow is up 78. Now let me show you something very interesting here. And it wasn't beginner's luck. It was skill. For 30 seconds. 18,111. We've gone to leg C. Everything about it says I've gone from a buy signal to a buy mode. There should be a D. We're above that retracement, that area, that downtrend channel that I call the inside track repellent zone. Unless we close deeply back into it, that would say that we go back all the way to the, let me see. That would take us down to 18,050. 80, about 18. If we go under 18,050 by the end of the day, not good. But so far, this is what it looks like. And the weekly chart improving. It held that up track support level, held the 9-period moving average. Everything about it. Look, the stochastic is improving. It's not great. On balance volume is good, but not great. The MACD is improving but not great. So it's the price that is dragging the technicals up. And that says to me, that says it's also somewhat a limited upside, but it's upside nevertheless. And that says that the area of the old high, 18,288, somewhere in the 18,200s, that's where we're going to find out, are there new buyers coming in? Is something happening? Are we starting to get the GE Dow Quartet acting very well? IBM, oh, look at that, Triple M, that's okay. UTX, struggling. Is there some kind of residual strength? And my thinking here is that when you have this fight to get to a new high. You remember, I believe we've been in a mini recession. We're in a mini recession. I also believe that it's shown up very well by the rotation, because the S&P and the Dow have not gone to new highs for 5-6 weeks, 4-5-6 weeks. And that says that, in fact, we have had a correction, because speed is your friend in a bull market. So it tells me this is where the waves are starting to, we're getting close to the top of high tide, but we haven't got there yet. So that's all I'm saying. All right, so that's the Dow. The S&P is a little different in that the SPY and the S&P have different notations on their charts. SPY is in leg C. The S&P is in double leg D, a triple leg D. So a peak D back at the high of 25th of February, a peak D, fourth highest peak on 23rd of March, and now a leg D on the 15th of April, and we'll see how this is going to carry and recycle higher, because it's only barely out of its inside track resistance area. But the weekly chart is showing that it really wants to test that trend line right there, and that trend line is specifically at, move this so you can get an exact figure, would be right at, if it's this week, it's at 2112, 2,112. A break above that, a nice break above into the true 2113.50 area or higher, it's going to be good. I don't want to see the market give back gains today. It wouldn't be bad, but it would not be as good as if we pull back now and then this afternoon have another bout of buying. Okay, so now let's go on. You've got the IWM all-time high. Very nice. In leg C, that suggests that it should still go to a D. Leg F/B, leg F, /B in the weekly. D in the monthly. Nothing technically wrong, but the technicals of the daily are not great. They're good, but the MACD's saying, I'm struggling. I'm not going to go that much higher in this particular time frame. All right, so let's get out of that and say the RTH, which is the retail, has made a top, and that top is at 78.75 in the daily. Now it's just stuck in this rectangle arch formation, and until it can break above 79 to say I'm going to all-time highs, I'm free of this burden of consolidating. I think the RTH, the retail market vectors ETF, is consolidating, and the weekly chart shows the same thing. So it needs to break out to show that it still has internal strength. Now let's do this. Within the context of everything we're looking at, I want to look at gold and show you something very interesting. You see how gold is held between 180 and let's call it the low 120s. That is really impressive when you put it together with the dollar that has actually gone almost back to its most recent high of 100.39. But at the same time, unless gold is going to break out, all it's saying is it's making these H formations, just a relief formation for a couple of months, weeks or months, before retesting the lows. I'll be back. Basil Chapman, Tiger Conditions Hour.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So this is on the 15th day of April. This is very important. Had a question about the XLF. It's a 2444. It is the S&P Select Financial Spider Fund. Basically, what we're looking at is got an inside buy mode that's gone from peak A to B to C to D. The previous one was a peak C1, C2 failure at 24.78, hit it twice, and then pulled back. Question of the den, really good question, especially for someone who understands the Chapman wave methodology. Is it possible that we are going to see an overlapping wave in the XLF, number one? And number two is, Basil, what evidence or clues do you have or see that suggests the financial sector will be a buy on any pullback and lead the market to the next level higher? Those are really good questions. Number one is we don't know whether the overlapping wave is actually going to succeed or if it's even going to come about until two things happen. One is the technicals on the pullback are higher than they were on the original buy signal, in this case 21.55, back at the week of the 17th of October of 2014, and they are better. Number one. And number two is the circles that I've got. And I'm going to get rid of the circle because it was there to show that sometimes a circle can be a top as well as that fulcrum for a move to the upside. This one's more appropriate. It says that within the context of the weekly chart, there's been a slow improvement, but it is really the monthly chart that I've looked at. And this pattern that I'm watching so closely, pushing above the 200 period exponential moving average with a wide beta between the 9 EMA and the 200, with the stochastic holding very well on any pullback in the stochastic, not very much price movement to the downside. Only one candle since the breakout back in early 2012 has closed underneath the 9-period exponential moving average. That's remarkable. That's showing me that there's been a very slow buildup in the financials that are going to be rewarded to the upside with a break smartly above the 200-period moving average into the 26, 27s, and then 28s. Looking out. That's my looking out scenario. But maybe this is the time just to grab it and have a position in the XLF, because they've been the most ignored section, the most spoken about, but really the most ignored section that I can think of in years. They used to be always the most favorable sector. So I'm thinking that there will be a pullback. It might not take out the 2370s, the low that was recently made. It might only go back to the 2410 to the 2390 area if there is a pullback. But it has to, of course, we have to see how it holds the 9-period exponential moving average. But that's my thinking at this particular point. Right now, all I can say is that the bias is actually still up to get this big Grand Canyon crescendo to the downside filled in a little bit more. And that's what I'm really looking at. That is the area. This is the rectangle. But if I was really being critical about critique, that is, I'd be putting my high bar right there and say that if the XLF takes out 2455, the high of the 24th of March, that's very impressive, and it's going to go to a new recovery high. That's really what I'm looking at. So I hope that helps. Now, here's the another can't go below 2350. No, I'm saying I don't think it's going to at this particular point, but you never know, of course, if we get a very sharp pullback. Yeah, it's going to be vulnerable. So, okay. Now, I was asked about the VXV. I had done work on this a long time ago because it was brought up. And then I said, it looks so much like the VX, all the other volatility index charts. So I didn't really do any work on it, but I did review it. So the question is, Basil, I saw this article today. Do you ever look at the VXV? Any possibility of a quick analysis on today's show? Odd indicator is significant concern for stocks, he's quoting. You've probably never heard of VXV/VIX ratio, but it may be telling us something very troubling about the market. Read more, and then it tells you what the story is. I haven't had a chance to read the story. I only just got it. But this is what I'm thinking here. I'm going to go to the VXV, and this, of course, as mentioned, is it's the VXV-VIX ratio, but the VXV itself is called, let me just stretch this a little bit so you can see it. And it looks a little bit different. Look, I'm going to do this real quickly so that you can get an overview. Here's the VXV, which is the CBOE S&P 300 3M volatility, 3-month volatility. Okay, so now what I'm looking at is I'm going to go to the VIX itself. Here we go before the break. Watch this closely, keep your eye on it. And now, are they different? That's the reason why I gave up using the VXV and many of the others. I got all my information right here. I'll be back. Basil Chapman, Tigers Editions out. Dow's up 61, S&P's up 9. Anyway.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back, and the slipping is down. It's up 47, and the S&P is still up 809, which means that there's much greater strength in the 500 than the 30. We'll be watching this. Anyway, I'm looking at the VIX index right now. Let's go back, and I'm going to keep your eye on this one. See how nicely notated. You see how nicely it came into the arch formation right there at 12.51, trying to rally yesterday, day before and yesterday. Now it's coming back. I believe that the VIX is getting really close to an area where it could start to reverse to the upside. I don't think it's there yet. This is the daily chart, of course. In the weekly chart, so the relationship of the VIX, the VXV goes out, I think, what did he say, 90 days or something like that? And the VIX is 30 days. Let me just double check that. Yeah, the VIX is a more familiar 30-day volatility index, the VIX, and the VXV is, in fact, the implied volatility over a greater period of, actually, I saw it just a minute ago. I think it's not double, 60 days maybe. So what's really important about it is they should match to a certain extent because they're based on pretty close to the same thing. Now, I'm going to do this. I'm going to show you the weekly chart of the volatility index, and I'll show you how these patterns are very important, because when you break a potential pattern, in this case, the arch formation, see that arch formation? At this time last week, it was looking as if there was a chance that we could close towards the 1450s the 9-period exponential moving average, which is now at 1432. And instead, what happened is we went to a low. Did we go to a lower low? Yes, we went to 1254 and 1251. So now we've got our D. Great. That's what I was waiting for. In the weekly chart, we finally got the D. Once we went from the B to the C, I said, okay, now I've got to be prepared that there could, in fact, turn out to be a D, maybe even an E, but at least a D. So that means I've got to extend this out. That's an A minus because it failed. And now I've got to take this and I've got to put it down here. So it's going to make it very simple in chart formation. If on Friday, the VIX is underneath 1232, but if it's even more important, under 1350, that's going to suggest that somehow or other we're going to squeak to new highs. If, in fact, that's in the market. If, in fact, we're in the 1455 to 1475 or higher area, this is Friday at 4 o'clock, we've got to start preparing for a very choppy week next week. So let's just make that as simple as possible. All right, those are the parameters that I'm looking at. Now, I want you to do something else. I wanted to finish up. We were looking at the gold. So here's the gold. And what I said about gold, gold is holding very nicely. But that says, wait a minute, if it's holding so well, why isn't the stock like GG, which is just picking up some steam right now at 1973, moving towards this 2053, why isn't it fill the gap? Well, that's because gold and gold stocks don't often go together. I like to see the gold stocks move and then gold follow. It's fine if gold moves and then gold stocks follow. But what happens if that, in that instance, is that if gold starts to then rally, you've got yourself a much better support in the gold stocks. Whereas if it's the other way around, that doesn't necessarily have to be. So now let me just look at one other thing. Looking at GG, which is gold core, the monthly chart is just horrible. The weekly chart is just one notch above horrible because this pattern very often can lead to a nice bounce. That very sharp move up and give back in a leg A minus. Remember my theory on the, I call it the single leg A syndrome. And right here, it fell and it came all the way back, but it didn't take out the low. GG didn't take out the 17 low, and that's very important. Went to 1790, 1788. And now it's trying to rally. I like to look at ASA. ASA is just, I don't know, like just South African mines. It's like a fund of gold stocks. This is the one that's telling me that we are just in this arching formation. Another lowercase arch formation, H or an M formation is forming. That's going to be very important. Why? Because it says that if the dollar, which is trading right now at 99.03, 99.12, so between 12 and 99.04, holding the 9-period moving average of 98.62, but has had a terrific move to the upside. The technicals didn't really move as well as they should, and that's saying to me we are just stuck in this trading range, and now you might see a little bit of a pullback in the dollar. But if by Friday afternoon the dollar has taken out the high of 99.99 made on the 13th, that'll be very positive for the dollar in the sense that it says now it's building up some energy to try to take out the 100.39 most recent recovery high of the 13th of March. So, okay, those are the things I want to look at. Now, I'm going to do this. We've got MDM was a question in the den. MDM is the Mountain Province Diamonds. Whoa, diamonds, huh? A, B, C, D, and leg E, but coming off a bottom, remember, it's very important to make note of this because you obviously, if you're going to have a very good move off a bottom, you will take out Ds and recycle and have maybe 2 buy modes. So this is very positive. Stochastic 81, the bank D is good. It's trading at 3.94 up 11 cents. That's 2.87. MDM is Mountain Province Diamonds. Nice, good eye. I've never seen this before. I might have hit the symbol by mistake, but it was just purely by mistake. Oh, I'm putting it down here. Why not? Okay, so this says that it's going into that candle right there. It's taking out that candle of 392. 394 is the high today, and that makes that crossover right there. Yeah, 407 is a possibility. The crossover in the 9-period exponential moving average. Very nice. Good eye. I like it. Would I buy it right now? I have to wait for pullbacks on stocks like this. So I'd reconsider what I'd do with it at 381 to 378. 373 has to hold the support. All right. Largest diamond mine in North America. Okay, never heard of it, but it doesn't mean to say it couldn't happen. Certainly has happened. Okay, I want to look at, I've written it down. Give me a second here to find it. Yeah, RHI. RHI is Robert Half. Now, this is Robert Half International Jobs Searches, everything to do with jobs. Made a peak, and it made a high in February of 63.21, and then 6 cents later in March it went to 63. Yeah, 63.21, and then 63.27 was the all-time high. Well, let me double check if it is an all-time. Yep, an all-time high, and it's made this beautiful a bowl breakout pattern. It's due for a bit of a rest, and that's another reason why I'm thinking that we're in a little mini recession. Look, this is 4 weeks now, 5 weeks. 1, 2, 3. This is the 4th week that is pulling back. And it's saying to me that there's been a problem. There's that same pattern. Remember, we were looking at 63.21 to 63.27. There's that break to the upside, that like right arm extension, I call it as well, sneaks above the older high, and the same bar that takes you out from your shorts and gets you into the longs is the bar that, boom, pulls back, and then the next day, splash, it drops down. That's a pattern that I call, I just took it off. It's called the drop bucket formation in the Chapman wave. It looks like a backhoe that comes in right there, and there's the arm goes up with the bucket and all the trash, and woof, lets it all out, drops, double top formation. It's like the lowercase h upside down, same thing, like the lowercase h inverted y. So this is very important to me. And there's another stock, Cintas, which is having not a bad day today, but it also made its high recently on the 19th at 88.23. And this has to do with overalls, clothing, and rentals. It looks like it's really struggling here. It could have a bit of a bounce as the stock we actually own on the short side. The real issue here is that, yeah, we could get stopped out, but the pattern is still not very good. And it's saying to me that something's going on in the economy. Now, it's going to be fascinating if within this context, you get some, what did I see the other day? A stock that I hadn't looked at for ages went by on the ticker. And lo and behold, it's a stock, JEC, was it? Oh, am I going to remember that? Jacobs Engineering, was that? Yeah, Jacobs Engineering. It made a major top back in 2014. I think it was January. Yep, January. It goes to 66.88. This is a stock I followed for years. And then I thought, oh, engineering, this is great. And all of a sudden turns around and it plummets down to the 37, 38 level. Now it's at 47.79 in leg C in the weekly. And I looked at this just the other day, and then it sort of went off my radar. And saying to myself, wait a minute, this is quite good ABC. If that's a C and not an F, then we could be going higher. And lo and behold, it goes C, D, and now it's in leg E, just above the 200-period exponential moving average. So if this is turning around, it means that within the economy, you're starting to see some sectors, industrial sectors, as Jacobs Engineering call, you're starting to see some sectors improving after being fabulous and then very disappointing. And now the weekly chart looks like it really has turned the corner to a buy mode from a buy signal. MACD is very strong, stochastics at 90%. I'm kind of liking this. And that's the reason why I wanted to introduce a couple of weeks ago the chance that if we use up time rather than price, we might just see a sideways move and then a rally to new highs. And then we've got to be careful again. I do believe that at some point we will get, I don't know if it's going to be a double-digit decline, because we've already rotated through some stock sectors, and that's been very important in using up energy, usurping energy. But it's also very important in that it usurped weakness by saying, hey, you might be weak, but you're not breaking down. You're just taking a period to rejuvenate. I'm looking at JEC. I'm saying, hey, don't get this off your radar again. This is a very important stock. CCI. Let me see what CCI is doing. CCI is Crown Castle. All right, now that's in a different sector. IP would be in that sector. IP, yeah, it's the same kind of chart pattern. So when I rotate through these different sectors, was Chicago Bridge and Iron, CBI, I think it is. Chicago Bridge. Geez, I've notated this over the years. I must be 50 times at least completely. Why is it all gone? All right, notation's gone. A, B, C. Is that a D? Yep, D. E, F pulls back. A, B, C, D, and it comes down sharply. Here's another one I got to put into the potpourri of stocks. Is this leg B? Yep, leg B in the weekly chart, trying to go to its 200 moving average, just like Jacobs Engineering was. I'm looking at this and I'm saying, okay, maybe. Oh, here's another thing. So we've got CBI, Chicago Bridge and Iron. This is heavy stuff that they're involved in. And then what happened? Moving towards this 200 period exponential moving average. And then all of a sudden, the steels are acting so beautifully. Look at this. U.S. Steel comes off this double bottom low, 20.13, makes a beautiful right, an arch formation, doesn't get even close to 2013, goes to 21.8, and now it's in leg D. Yeah, leg D in the daily. Very interesting indeed. AK Steel. Oh, what a beautiful day. Oh, that was on my list yesterday. Well, I can't complain. But look at that move. That is very nice. AKS trading at 5.09, up 36, up 7.61 today alone. Probably wouldn't have got it because it closed at 4.73, and I would have said buy it under 470, and the low was 473. I would have missed it. All right, so it's in leg D, but it's looking very good. So why are these steels? This is heavy-duty stuff. Steels, I mean, even more than aluminum, acting well. And that tells me something's going on that implies that the rotational correction aspect is still in force. I thought this was going to be the move that took us 8%, then 10, then 11 or 12 downside, but we've used up a lot of time, more than usual, 5 to 6 weeks, haven't broken down. I have to consider that we are in a rotational correction. Now, here's the big question. Does this rotational correction mean that as soon as the actual rotation is done and people have all their positions, that the market should break out and start its big move to the upside, like a wave 5 in Elliott? I still think we need to have a pullback. I still think we need to go down to get all those newbies that have come into the market, deadly afraid of the market, and out the market yet again. And only then will we start that next massive phase that takes us a lot higher into the 19,000s. All right, I'll be back. Basil Chapman, Tiger Conditions Hour. Enough remunerating and remunerating. I'll be back in a moment.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Yeah, so it was mentioned to me during the break. I got an email saying, Basil, look at MAN. Goes with CTAS. Yes, MAN is Manpower Group. Is acting much, much better, is holding up at the highs. This is an A, B, C, and it's gone to the D over there. Yeah, it's acting way better, but it's also been a bit of a consolidation over the past couple of weeks. And so let me just put that down. I'll do a little bit more work, and maybe I'll feature it in my opening call as something to be looking at. But at this particular stage, I would suggest... you see this pattern? Look at this pattern right here. You see that? Does that not remind you of a stock we looked at just a little while ago? You remember it? We did this during earlier with Joyce Tree. You see the arching formation, that rounding top? And that rounding top suggests that, yeah, it could go a little higher, but at some point it's going to be stuck in the containment area. So you're looking at man possibly already being there. So it's this is going to be a very interesting period. If it breaks out from the 85.39 level it's at, up 87 cents right now, MAN takes out 88 in the next 2 weeks, that'll be very positive. That'll suggest that maybe a little mini recession could be nearly over. We'll see. Another one is Lamar. We had this way back and then didn't hold it long enough. But look at it now. It's in the 60.90 was the high just 4 days ago. And look at this. Lamar Advertising Company. They actually now call it a REIT. I didn't even know that. I always treat it as an advertising company. Look at the way it's gone in the weekly chart. See, when you look at these charts, when you look at enough charts and you see that there's been steady moves, a buy and hold pattern, then you say to yourself, at what point will it stop being a buy and hold pattern? Well, there are some stocks, this isn't showing a sign yet. Well, it's just showing a sign, but it hasn't given any price indication that there's an oval pattern that could be forming right here, and that there's limited upside, maybe limited downside, but it's time that we could be looking at in the advertising area. And that's really what I'd be looking at. Isn't that interesting? But back at the ranch, unless you've got a stock that's run up to new highs or an index like the IBB that's screamed to the new high and then taking quite a hit on the downside and now is struggling to fill in everything, and even especially the gap. Remember the gap that was the low of 363.63? I forgot it was 363.63 and 362.67. It's a point that it has to fill in, and it hasn't done that. Oh, I got the short via the biz. We're out of that, so let me just get rid of that. Took a little profit there. Okay, so this is the pattern I'm looking at. So the H pattern, lowercase h, has come into a W or a cup formation, and this one says, watch real closely, because at this particular point here, right there, the 364, maybe even 365 area, if there's a turn down or at any point it starts to take out 351, it's at 360 right now, takes out 351, that suggests very strongly that both the daily and the weekly are very close to turning down and starting to go for the 346 target that I have looking out, not right now, but looking out. Okay. So HCLP, question in the den as we're about to wrap up, and hand it over to Larry Pesavento. It should be a wonderful show as always with Larry. Here we go. Yeah, that's looking very good. This is High Crush Partners LP, HCLP. All right, very nice. So this is A, B, C, leg D, I believe. It's acting very well, but there's that H to the M pattern. They're all doing the same thing. All right, folks, I'll be back tomorrow. Have a wonderful day. Check out my opening call. Very comprehensive. Look at the markets, plus our Traders Corner. And I will be back tomorrow. Stay tuned for Larry and all the rest of the shows. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.